Yo, what up? It's Teddy, Caravan Crypto. Today we're going to talk about earning Bitcoin versus buying Bitcoin. But first, let's look at the market. It is July 5th, 2020 at the time of recording this video. And Bitcoin right now is sitting at $9,106. It did take a dip down to, I believe it was like 80, where was it? 8,900, pretty much. Nope, sorry, 8,942. And for some reason, I thought it was going to take the plunge and we're going to get cheaper Bitcoin, but we did not, and it's climbed back up to 9,100. I think that we're gonna kind of drift on down with these little pumps and then coming back down and go down to lower lows. I'm hoping to get some cheaper Bitcoin in the future, but other coins like VeChain is actually doing phenomenal. If you look at this chart and you look how this is rising up in this direction, it is doing great. You know, if we look at it on the if we look at it on the 343-minute chart, you know, you see that if you got in down here when the white went over the blue, you were at 0.0045 cents, and you are now at, where is this at right now? 0.016 cents. You know, that's like the high that you hit a few yesterday, and now you're sitting at around 0.015. So, you know, a growth of maybe 300% if you go from back here to there, which is pretty good. And back here, you know, we're looking at May 20th, so about 3 weeks. Yeah, no, sorry, that's not May 20th. Yeah, it is May 20th. Yeah, about 3 weeks. You did 300%. Pretty good, if you ask me. Let's look at the market. Everything's pretty much following Bitcoin. Cardano had some very big news, and it's up 1.7%. I think if in the last 7 days, it's up quite a bit. But you should check out the new Shelly launch that's going on with Cardano. Something to look into. Anyway, let's get into it. So look, one of the ways to acquire Bitcoin is to buy it, right? And one of the ways to buy it is by connecting with people who are local to your region. Now, the thing with going to buy locally is typically people charge a premium of between 7 to 10% on top of the price, the current price of Bitcoin. So most of these prices will fluctuate in a way, you know, it's pretty consistent with the going price of Bitcoin, which is 9,106. And if you look on here on this website called Local Bitcoins, you know, this is a cheap one for 9,410, but this is 9,700. This is 98, 98, 98, 99. You know, this is how much people are selling Bitcoin for in person. What's cool about this site, it's called Local Bitcoins, is that you can go to pretty much any country in the world and access somebody who is willing to sell their Bitcoin. Now, what you do is you show up in the same place, and you have your phone, they have their phone. You verify that they have the Bitcoin. They verify that you have the money. Okay, it's kind of like, you know, buying other things in person, right? Once that's verified, you go ahead and transfer it, and then you hand the money over, and you guys walk away. You have to be careful because, you know, obviously, you know, if you're meeting a random person to give them $10,000, sometimes those people may not be very trustworthy. Maybe they have some nefarious or malicious intent by meeting up with you. It's not something that hasn't happened before on this website, Local Bitcoins. But nevertheless, you know, transactions still occur. And on Local Bitcoins, you know, they had 1.46 million new customers on Local Bitcoins. They did $2.4 billion worth of transactions last year, and they did 15.6 million trades, right? So there's a ton of people using Local Bitcoins to go and purchase Bitcoin in person. There's other websites that do this. This is not the only one. Another way to go and get cryptocurrencies is to use an exchange. I would hope at this point you're familiar with exchanges, but if not, they are digital marketplaces that do the same thing local Bitcoin does, except a third party intermediary is verifying that you have your money and the other person has the crypto, and they're making that exchange in real time, where you don't have to meet the other person. So you'll never know whose Bitcoin you're buying, and they'll never know whose cash they're receiving, but this exchange is plugging those two connections at a rapid rate, just like it would on the stock market. As a matter of fact, these charts that we look at here these prices are using exchanges like Binance to determine the going price for Bitcoin or for any other coin that we want to look at. This is VeChain. If we go to Tezos, this is the going price of Tezos. The going price of Tezos over the last several days has been dropping, right? Link is on here, XLM. These are all visual chart representations of the buying and selling that's going on exchanges. And most of the reputable exchanges, I personally would recommend Binance and Gemini Exchange. You can also use Coinbase or whatever exchange that you decide to use. There's tons of them out there. It's up to you which one you want to go with. But this is where we get the prices from, is from these exchanges trading Bitcoin back and forth for fiat and other cryptocurrencies. Now, if we look at what kind of revenue exchanges did in the last year, or let's look at this. This is for 2018, but in just 1 week, the total volume of cryptocurrency exchanged for Bitcoin from January 10, 2018 to January 16th, 2018 reached $64 billion US. Okay, the total volume of Bitcoin exchanged for other currencies, both crypto and fiat, was $40.9 billion. There's a lot of action going on these exchanges. A ton of action going on these exchanges. Bittrex is another exchange I've used. BitMEX is another one which offers leverage trading. OKX, Bitfinex. I don't know if you want to use Bitfinex, but it's up to you. Okay, do your research about which one of these exchanges to use. Okay. Another way to buy Bitcoin is through Bitcoin ATMs. If we look at January 1st, 2014, we've got 4 ATMs in existence. And if we go to July 6th, 2020, we have 8,538. Just going from January 1st, 2019, you have 4,000 ATMs to now you have 8,000. It's a 100% increase within a little over about a year and a half. And I see that this curve is probably going to continue this trend of getting more and more parabolic, especially as more investors, large investors, institutional investors, get into the space of Bitcoin and cryptocurrencies. There was some news last week about Walgreens, CVS, and Rite Aid all putting in about 20,000 ATMs across their stores in the United States. So physical stores like these are going to have Bitcoin ATMs in them. And if you can imagine how many people frequent those stores, there's probably going to be a large number of people accessing ATMs to purchase things, to trade with others, for a number of reasons. But yeah, so that's something that's probably going to promote growth. Now, the last piece, and I think is the best piece for accumulating Bitcoin, is to earn it. The thing with earning Bitcoin is that it doesn't disrupt what you already are doing to earn fiat. And, I know you earn fiat because it's how you pay for your standard of living currently. So to take some of that fiat and turn it into Bitcoin, it kind of limits how much of your standard of living you can pay for. At this point in time, many of us use Bitcoin as a savings and investment account. We typically don't intend on touching it until it matures. Now, if you're earning Bitcoin, especially if you're earning it on a consistent basis, you're not trading the fiat money for it. You're not trading the fiat money for it. You're putting on the record that you spent that fiat money Sorry, I'm reading this. Okay, all right. So look, if you're earning Bitcoin, especially if you're earning it on a consistent basis, you're not trading the fiat money for it, putting on the record that you spent the fiat money, indicating to a central database that you bought a certain amount of Bitcoin, which may or may not come up in a future taxable event, right? I encourage anyone to pay their appropriate taxes, by the way, but by earning Bitcoin, you also skip the step of having to transfer funds to an exchange and then purchase the Bitcoin, then sending it to your wallet. Right? You just simply get the Bitcoin right away for the completion of your negotiation. Since it doesn't cost you any fiat or the loss of property or assets to gain the Bitcoin, you accumulate at a greater rate. And if you want to purchase more with your fiat, that's your choice. Okay? But here's where it gets interesting. All right, so look. Imagine a block of houses. There's 5 houses. On the end of the block is a commercial property, like a store or an office. Let's say the developer who created this block has no mortgage to the bank, right? They don't owe any money to the bank. They own these properties free and clear. This developer who created this block of properties decides, I'm only going to get paid in Bitcoin from my tenants. Now let's say those tenants work in a commercial property where a business is operating from. They all see that they are going to have to pay Bitcoin to the landlord each month. So what do? First, the business says, I'll take Bitcoin for payment from the customers. Because the logic is, I got to get some kind of Bitcoin each month anyway. Instead of going to an exchange and trading my fiat for Bitcoin, why don't I just take Bitcoin for payments from my customers, because I'll just speed up that process, right? And if the employees of the business say to the business owner, hey, I got to pay Mr. Phil, the landlord, for a mortgage each month, and I got to pay him in Bitcoin, why not just pay me in Bitcoin since you're my employer and you accept Bitcoin as payment? Makes sense, right? And the owner would probably say, yeah, makes sense. Why don't we just do that? Skips a step, and helps me just get that going now, right? Okay, so 2 things happen here. One is that there's no bank involved, okay, which is a pretty big point. There's no merchant processing system. There's no middle person collecting a fee. Money is getting exchanged just like cash would, except no one really carries that much cash anyway, nowadays. And our banking and finance system runs on cash ending up in a bank somehow, right? So in this scenario, the cash would just simply not end up in a bank. Maybe it ends up in the exchange's bank or whatever, right? So microeconomics is like basically unfazed by the way that this small economy is set up, right? The microeconomics of it continues business as usual. Customers come in with Bitcoin that they maybe purchased from exchanges or whatever. They still get their service or product. The business owner is able to pay rent with Bitcoin. The employees are able to get paid in Bitcoin and also able to pay their mortgage or rent with Bitcoin. And so economics flows, just as it would with a fiat system. Now, I think obviously some of the money will have to get liquidated into cash, because of groceries or the light bill or whatever. But essentially, you could get a crypto debit card for that, and still no major bank would be involved for the most part, anyway. So that's one thing that's happening. The second thing that's happening is that the Bitcoin that the business is generating is pooling into this circle of people. It's true that the developer, the person who owns the 5 houses and the commercial property, they would get the lion's share of the pool of Bitcoin. Then the business owner probably would, and then the employees. But you could decide any part of that chain you'd want to be involved in. The next thing that happens is Bitcoin goes up, right? And before you get to going about how it could go down, like, yeah, that's true. But then that means that each person is earning more Bitcoin if the prices are down. Okay, if Bitcoin is lower, that means in order for you to get my services or my product, you got to give me more Bitcoin than I would get if Bitcoin's price was higher. And over some period of time, Bitcoin's price is going to go up. Okay, and so once it goes up, everybody in that chain now benefits, because whatever money that they were saving or they were pooling together, and whatever they had left over after paying expenses, all of the value of those things just went up as Bitcoin's price goes up, right? And so now they've kind of completed a cycle to where they earned Bitcoin, they saved Bitcoin, and then they benefited from the price of Bitcoin increasing. That cycle is complete. Once they've experienced that, that their savings doubled or quadrupled or whatever, and then being able to take advantage of the growth of their savings, there's basically no going back from that. They would want to do this again and again and again and again and again. So the developer probably would want to do this again, maybe the next block over or whatever, wherever they'd be able to do that. The business owner would probably try to upgrade or maybe open up a new place if he's got enough capital, or advertise even more that they accept Bitcoin so they could keep pooling all that Bitcoin. The employees would tell other people that they know, like, hey, friend, brother, sister, aunt, mom, whatever, you should probably get paid in Bitcoin. This is what happened to me. And that begins to spark, or pique the interest of people who otherwise normally just wouldn't accept Bitcoin. Okay. Now, the business owner, could also go to the landlord or vice versa, and both of them could invest into the other's endeavor to try to do this all again. Whether it's opening up a new spot or investing in property. But, people who are making these moves begin to see the benefit of these moves, and they truly they get to experience, why they should be doing it like this, right? Why they should be running their business with Bitcoin, their properties with Bitcoin, etc. Okay. A question to ask is, where's the bank? Where is the bank? Also, how much is each person going to get taxed? And how would anybody know that they're getting taxed? And how much to tax them? How is it calculated? Where's the record on the blockchain? You know what I mean? I'm not saying don't pay taxes. I'm just saying that this is now a thing, okay? This is like a factor here. And you can't show somebody whose wallet is whose. You can't really get to that point. There are crypto forensics that go through a great deal of detail, but they're mainly focused on criminals exchanging like a ton of money, and a lot of money. And it's easier to find that because you narrow down, the amount of the amount transacted to a smaller number of wallets, and then if you can access one wallet, you can begin to piece together whose wallet is whose. But again, you still have to prove a whole lot in terms of that regard. I'm still saying pay your taxes, okay? I'm not saying don't pay your taxes. And keep in mind, I'm just some random guy on YouTube. I'm not a financial advisor. But I hope I illustrated not only the benefits of earning Bitcoin as an individual, but also as a functioning collective economic system. It's just something to think about. And maybe you can begin to apply this in some of your endeavors and some of the projects that you got going on. But yeah, I hope all is well with you. Thanks for listening yet again. Until next time, peace.